Welcome to Talk Tickers, where we dive into the story behind the stock ticker. Today we're unpacking Shentel's second quarter earnings for 2025, and this one is a real head-scratcher. The company beat on earnings, profitability is way up, but the stock? It took a nosedive. We're going to figure out exactly why.
And that right there is the central puzzle, isn't it? You got an earnings beat. You got fantastic margin growth. By many measures, this should have been a good quarter. And yet investors hit the sell button, and they hit it hard. So the big question is, what did they see that made them so nervous?
So here's how we're going to break it all down. We'll start with the numbers, then dig into their big pivot to fiber. We'll look at what management is planning, see how the market reacted, and then we'll give you our take on what to watch for next.
All right, first up, let's get into the numbers. And right out of the gate, you can see why this whole report card feels, well, a little mixed. On the bottom line, the earnings per share, they did beat expectations. The company reported a loss of 19 cents a share, which just squeaked by the Wall Street consensus of a 20-cent loss. So technically, it's a win, but it's about as narrow a win as you can get.
But, and this is a really big but, the top line, the revenue, told a totally different story. Sales came in at $88.6 million, falling short of the nearly $90 million everyone was expecting. And right there, that is our first major clue about the market's negative reaction. Profitability was a little better, sure, but they didn't sell as much stuff as they were supposed to.
Now here's where it gets interesting again. Even with that revenue miss, their profitability absolutely soared. That 21.9% number, that's year-over-year growth in adjusted EBITDA, a really key metric for profitability. It means their margins expanded in a big way, from 27 to 32%. So the business they are doing is getting way more profitable.
Okay, so to really understand this dynamic, we have to talk about Shentel's main strategy, their huge pivot to fiber optics. This is the whole story for the company right now. It's a battle between their shiny new growth engine, fiber, and the old parts of their business that are, well, kind of a drag.
And wow, this chart just lays it out perfectly. Look at that Glow Fiber segment. It's on fire. Revenue is up over 40%. But at the exact same time, their legacy businesses are shrinking. They're acting like an anchor on the overall results. It's become a race. Can the new fiber business grow fast enough to overcome the decay of the old business?
And you can bet management is leaning into this story hard. On their earnings call, this was the message. They're telling investors, hey, focus on the glue fiber growth and the cost savings we're getting from our Horizon acquisition. That's the engine that's going to keep driving our profits and margins higher.
And to be fair, they've got a point. I mean, these Glow Fiber numbers are genuinely fantastic. Subscribers are way up, they're rolling out service to thousands of new homes. That 71% incremental margin is huge. It means almost all their new revenue is highly profitable. And maybe most importantly, customers are sticking around. The churn rate is low and getting better. This is what a healthy, growing business looks like.
So we know the fiber business is strong, but what's the game plan? What does management see for the rest of the year? Let's take a look at their official guidance and strategy.
For the first time, they put out a full-year forecast. And what they're projecting is about 8% revenue growth and a really robust 22% growth in adjusted EBITDA. This is management basically signaling to the market, we are confident that this trend of profitable growth is here to stay.
A few other strategic moves are worth noting too. They've officially hit their cost-saving targets from that big Horizon acquisition. They also announced a leadership change at the top, made a small, tactical fiber purchase, and they're pulling some spending forward to get a jump start on projects that are getting government grants.
So, we've heard management side of the story. It's all about fiber growth and expanding margins. But what was the market's verdict? With all this information in hand, how did investors react?
Well, the reaction was brutal, plain and simple. The stock dropped almost 10% in the trading session right after the report came out. It seems that revenue miss, no matter how small, just completely overshadowed everything else for investors. It spooked them.
And get this, this wasn't just a quiet little sell-off. The stock plunged on a massive spike in trading volume, up nearly 80%. That tells you something really important. This was a high-conviction move. A lot of investors decided they wanted out, and they got out in a hurry.
So, after all that, where do we stand? Let's put all the pieces of this puzzle together and give you our official take ahead of the next earnings call.
Our rating on Shentel is market perform. Now let me be clear, the story here, this transition to fiber, it's real and it's impressive. But the market just fired a major warning shot. With this sell-off, they've reset expectations.
Here's the core thinking. The fiber growth is undeniable.
But that revenue miss, it just injected a whole new level of execution risk into the stock price. The conversation has now shifted. It's not just about building the network anymore. Now it's about proving you can consistently hit sales goals and actually get to real GAAP profitability. So next quarter, all eyes will be on net subscriber adds and, even more importantly, their take rates. What percentage of those available homes are actually signing up? That will be the key catalyst, because that legacy business is still a very real headwind.
So if you're looking for an interesting way to think about this, consider a pairs trade. You could go long on the broader communications sector, say through the XLC ETF, to bet on big themes like AI and media that are lifting the whole industry. At the same time, you could go short Shentel. This way, you're hedging against those very specific risks we've talked about, the execution questions, and that drag from their older businesses.
So, that's our look at Shentel's quarter. It's a classic transition story, really. You have strong progress in one area, fighting against a decline in another, all while a nervous market is now demanding absolute consistency on the top line. This is not financial advice.